Good morning and welcome to Rational Thinking. This week we'll be covering the US interest rate cut last week, along with the US jobs data, in addition to the UK interest rate outlook that we're expecting this week. So to start off with the pound last week, we're really seeing the coronavirus fears creep in ravaged financial markets. While we're seeing a lot of safe haven flow between Japanese yen, Swiss franc and US dollar, the pound has been relatively unchanged with the data coming out from coronavirus. However, this week saw the UK-EU trade negotiations begin, and naturally, as you expect, both parties firmly not moving ground has caused sterling to weaken. Now, why this was a double-edged sword was because the trade negotiation and the trade tension itself is negative and adverse to the US economy, and in doing so the pound. But if you add that onto the coronavirus epidemic, that then starts to become a real concern. So we saw sterling start off the week really poorly and definitely move lower. However, the incoming Bank of England Governor, Andrew Bailey, actually went on record to say that although the US has now cut interest rates by an unexpected 50 basis points, the UK would probably look to the budget that we've got coming out this week to see if there's anything additional needed from there to really boost the UK economy. And that was received really, really well. Sterling actually recovered from the losses that it posted and is now showing a good level of upward inclination. Moving on to the US dollar, last week we had the unexpected 50 basis point cut from the Federal Reserve. Now this is the first time that this has happened since 2008, and the Federal Reserve are citing obviously the coronavirus and the economic implications that those could have. However, an interest rate cut from the US has been discussed in one way, shape or form following the trade war with China. So to see the interest rate cut is not a surprise as such, but to see it cut by 50 basis points as an emergency rate cut is huge. Nevertheless, although we had this rate cut, which is very much dollar negative, on Friday, being the first working Friday of the month, we had hugely successful employment figures. We're talking the non-farm payroll, the unemployment rate, and the average hourly earnings, all coming in stronger than forecast to reinstate that the US jobs market is still in a very strong and robust position. Looking to the week ahead, we've got the UK budget announcement on Wednesday. This budget announcement is huge because, as mentioned earlier on, the Bank of England, or the incoming Bank of England Governor Andrew Bailey, will be looking to see if the fiscal package by the new Chancellor is robust enough so to give the economy any additional boost should there be the adverse fallout from both coronavirus and the UK-EU trade discussion. Again, on Wednesday for the US dollar, we've got inflation figures, both core and normal. These figures will be quite closely watched to see if the month-on-month reaction has been negative and how potential 50 basis point cut will cause inflation to increase. Moving on to the Eurozone, on Thursday we've got the Eurozone's main monetary policy meeting. So we've got their discussion around the refinancing rate, their asset purchase program, and obviously the press conference also. Considering the Federal Reserve cut their interest rates by 0.5%, we are on this cusp of a global economic slowdown, and obviously we've got coronavirus as well. It'll be interesting to see if the European Central Bank apply any further stimulus into the monetary system to keep the system going. And that's all from me. As always, thank you for joining, and please do like and share the video. If you have any questions or queries about anything we've discussed just now, or in terms of EuroFX in general, please feel free to reach out to us on the email address provided. Thank you.